Bitcoin and money laundering laws intersect due to concerns about the potential misuse of Bitcoin for illicit activities, including money laundering, terrorist financing, and other financial crimes. Here's how Bitcoin is regulated in the context of anti-money laundering, AML laws. 1. Know your customer, KYC requirements. Many countries require Bitcoin exchanges, custodial wallet providers, and other virtual asset service providers, VASPs, to implement KYC procedures to verify the identity of their customers. KYC requirements typically involve collecting personal information, such as government-issued identification documents, proof of address, and other relevant details. By implementing KYC procedures, VASPs can help prevent criminals from using their platforms to launder illicit funds. 2. Customer due diligence, CDD. In addition to KYC requirements, VASPs are often required to conduct customer due diligence to assess the risks associated with their customers' transactions and activities. CDD may involve ongoing monitoring of customer accounts, transaction analysis, and screening for suspicious activity. By conducting CDD, VASPs can detect and report suspicious transactions to the relevant authorities in accordance with AML regulations. 3. Transaction monitoring. VASPs are also required to implement transaction monitoring systems to detect potentially suspicious or unusual transactions on their platforms. Transaction monitoring involves analyzing transaction patterns, volumes, and other indicators to identify potentially illicit activity, such as large cash deposits, multiple transactions below reporting thresholds, or transfers to high-risk jurisdictions. Suspicious transactions must be reported to the appropriate regulatory authorities for further investigation. 4. Reporting obligations. In many jurisdictions, VASPs are subject to reporting obligations under AML laws, requiring them to report suspicious transactions, large cash transactions, and other relevant information to financial intelligence units, FIUs, or regulatory agencies. These reports help law enforcement agencies track and investigate money laundering activities and combat financial crime. 5. Compliance requirements. VASPs are expected to comply with AML regulations, including implementing robust AML compliance programs, appointing compliance officers, conducting risk assessments, providing AML training to employees, and maintaining records of customer transactions and due diligence efforts. Non-compliance with AML requirements can result in regulatory sanctions, fines, or legal consequences for VASPs. 6. International cooperation. Given the global nature of Bitcoin, international cooperation and coordination among regulatory authorities are essential to combat money laundering and terrorist financing activities involving Bitcoin and virtual securities. Countries may exchange information, share intelligence, and collaborate on investigations to disrupt criminal networks and enforce AML regulations effectively. Overall, Bitcoin and money laundering laws aim to strike a balance between fostering innovation in the Bitcoin sector and mitigating the risks associated with financial crime. By implementing robust AML measures and cooperating with regulatory authorities, VASPs can help maintain the integrity of the financial system and prevent Bitcoin from being used for illicit purposes.